Can you explain for listeners who might not be across unit economics what your version of strong unit economics is?
For a start, a high gross margin is very helpful. And then the question is, what about the other costs? And I think the next big one is your customer acquisition cost. So you do see businesses that have a very high gross margin. So that's sort of the cost of the product from the supplier. And then they get to sell it at a certain price because they're a brand and make a profit out of that. But one of the things which is probably relevant for many of the listeners here is how much do they have to spend in their profit and loss to acquire the customers. So, you might see businesses that were spending 30% of revenues on customer acquisition. So to do that, you really need to have a high margin, because if you don't have a high margin, there's just not enough left over to pay for your overhead, your profit, and so enough at the bottom. So sometimes businesses, they might address a need or have come up with an idea that there is a market for, but at the price they're selling it, there's not enough profitability in the system to make the whole thing work. And I think we both know that if a business actually generates a profit, it just makes it a hell of a lot easier to run it.
Yeah, it kind of helps.